What is going on, everybody? TG here, and we are back with another video. Long weekend, good recovery, resting, and getting ready for this new week. And that's exactly what we did. Big day today, up 9%, but we completely changed our strategy of investing. And I want to go over all the new plays that I did make today. We're going on a more longer term approach because as of right now, there's a lot of uncertainty in this market, and I was risking a lot. I was a bit overextended, and it cost me. It cost me bad, actually. If we go ahead and look at the month, it cost me bad. $33,000 mistake that I made. But you know what? We're ready to rebound. We're ready to rally, and that's what happened today. The market's absolutely soared. Dow up 603 points, S&P up 2.38%, Nasdaq up 3% today with the VIX dropping hard. Now, I want to go over what I did today because it was a big decision to make. As you guys know, I had that leaps call on Amazon that I was very bullish on. I was very bullish on Amazon long term, but I was getting killed on it. I was up 18,000 at one point, and I found myself down 5,000 today. I was down about 9,000 the other day. So I saw a chance to get out with something, so we took a $5,000 loss. But since we are still very, very bullish on Amazon, we opened up a ton of long-term put credit spreads. Now, I made a video about put credit spreads, essentially saying that the stock is going to stay above a certain price by a certain date, and that's exactly what we did. We opened up 27 put credit spreads on Amazon for a 3,000 strike price by January of 2022. So almost an entire year away. We're already up a little bit on about 600 bucks. But essentially, we got paid $25,925 in total to risk $54,000. Now, that is a massive bet. I understand. Huge bet. But I also think it's a pretty safe bet. And the reason I say that is because usually over time, stocks tend to go up. And I know that. Okay. But you also have to take into consideration, okay, what happens if there's a very slow market, a slow economy? Slow growth for growth stocks, which people have been talking about with interest rates rising, the bond yield increasing to about 1.5%, could potentially rise to maybe 1.8 to 2% in the near term. That could be bad for growth stocks. That could definitely affect earnings, especially with inflation going. So I wanted to look at it for a more longer standpoint and a more safer standpoint. So if we go ahead and break down Amazon, well, as we know, for the last, however many months, almost 9 months, the stock is traded absolutely flat. So, taking a couple scenarios, let's say it does that for the next 9 months. It probably won't, but let's say it does. Well, my leaps call, which is a 3,100 strike price, if it ends at 3,148 like where it is now in a bunch of months, I lose about $35,000 to $40,000 on that leap call, which is about half of my account. I don't want to take that risk. Okay, that's a big risk for me. So what instead I do, okay, I want to be bullish on it. I want to make, a pretty good return. All right, I'll throw it into long-term put credit spreads at a $3,000 strike price. Amazon stays above $3,000 by next year. We pocket 25K. That's no joking. That's no joke right there. That's big money. And yeah, I'm waiting 11 months or whatever, 10 months. It's worth it though. It's a very good amount of money to get on a position like that. And, we had to assess the risk. And I believe that for my risk management is the best thing. I mean, I don't want to go through days where I'm losing giant amounts of money, long term. I'm not really going to be too worried on the price fluctuation of Amazon. And this will allow me to, have a little less stress in my life and also still make 25 G's in a year if it works out. So we did that. We also have a couple other ones. Like we said, we have a 3,100, 3050 one and a 3,100, 3040 one. We got about 5K for that. So in total, $30,000 on the line for Amazon. We also have some Alibabas. You guys know me. I love Alibaba. In Jack Ma we trust. Okay. This is obviously a glitch. At the end of the day, it always shoots up big, but we're right about there, 335. So we got paid $3,600 in premium, risking how much am I risking? $11,000. Yeah, $11,000. Another obviously big risk play, but max loss is coming in at around $7,000. So not too bad, and it's pretty safe as well. Alibaba staying above 200. Alibaba is $241, so that had to be a big price drop for it to go under 200. We did see that though in March. It was under 200 in March, but that was obviously during a pandemic, and then it completely recovered and was right back to where it belongs. So I think even if, like I said, we have no growth at all, the stock could lose 10%, we'd be fine. The stock could lose almost 20%, we'd be fine. So something super, super safe like that. So that was on Alibaba. We also did some on Nvidia as well. Nvidia, whatever you guys want to call it. People pronounce it all different ways, but we're here to make some money, not to pronounce things. Not much on this one. We got $1,230 to risk $3,000, so about a 40% return on investment. Pretty good. Saying that I'll say about 470, and it's at 553 right now. We wrote these when they were down today. Not sure why it says we're down, but you know, it's one of those things. They don't move much because they're leaps, so they don't move as much. But you know, more premium right there from Nvidia, so that's even more premium. Now let's go ahead and look at the other one that we did, which was on Facebook. We opened up 5 of them on Facebook. Not as much, I know, only 650 in credit, but we also did another one on Facebook for you earlier time that we wrote a couple months ago that we are up pretty nicely on right here. These 220s that we are already up a nice $400. You can get another extra $1,300 out of it. So by next year, if all things go according to plan, we have the $25,900 from Amazon on that one. We also have the $5,000 from the other one that we got. So that right there is about $31,000. Plus we got another $1,300 from these Facebooks, and then another $650 from the Facebooks. So that's even more money, and then another $3,000 or so from the Alibaba. So that's even more money. And then we got, how much did we get for the Nvidias? Was it $1,000? $30 from Nvidia. So if all works out according to plan, we'll make about $37,000 in about 10 months, as long as the market doesn't crash hard. We're not betting on anything big. We're not betting that these things moon. We're just simply saying that they're going to stay the same or only drop a little bit. I think that's a pretty high percentage bet. We're obviously risking a lot. We could lose a decent amount of money, about $30-something thousand if it all goes to hell. But I think that this will work out well, especially the Amazons. I don't really see Amazon dropping much lower. It's been doing really bad, you know, in the past 6 months. 6 months ago today, it was approximately down over 10%, 11% from where it is now. That's a correction, obviously, from where it was in September when it had that run. So like I said, even if it trades sideways for the next year, we still profit. It could drop 100 points, we still profit. So it's a pretty safe bet. We're focusing more long-term. We closed out some of the ones short terms. We actually made a mistake this morning. We sold calls on Apple when it was up about 2%. Yeah, that was a big mistake. We're already down 560. It's a 129 strike price. It's essentially there right now. You know, we messed up badly. Hopefully Apple stays the same or goes down by the end of the week, so we can get out of that. And then we also did a call credit spread saying that it won't go above 132 this week. We're down $5 on that. But we got paid $60, so as long as it doesn't go above 132, we make $60. I just think Apple run up a little bit too much. I still really love Apple, but I mean, obviously you guys know I have a ton of Apple credit spreads and Apple leap calls as well that we have. So we have 7 of those. We're still down on them, obviously, but we had a whopping $1,800 gain on that today. So, you know, a lot has been happening. A lot has gone on with the market and my new option strategy. I had to really obviously think about it a lot because, you know, I'm limiting myself to only making that this year. You know, it's still a ton of money. Don't get me wrong. It's a ton. But we're limiting ourselves for that. We're not going to hit that giant home run and, you know, get 50% or more. You know, we're getting about 40% return on investment on all the, when it's all said and done, if they work out according to plan, which I do believe they will. But yeah, we'll just have to see. I'm really mad about Apple because I don't want to have to buy those back because I want to hold those Apple leap calls long term because I love Apple. I made many videos about that. But essentially the goal is to be able to close these other Amazon credit spreads out that we have, all these ones for March, and roll these again to even farther out, you know, even safer. Just because that's what we're really trying to do. We're trying to play it on the more safe side, and I think that's what's going to benefit us the most. But as you know, we're still down on a lot of these credit spreads that we've written. You know, we're still down 21%. Just because of the fact that it's just Amazon took such a bad hit last week and it's starting to recover now. You know, but it's still down obviously a lot from where it was even last week. It was sitting at like 3,200. but it's been a bloody month as well, down over 6.71%. So I think recovery's on the way, but there's a lot of uncertainty, especially when it comes to Amazon with this whole union vote and all that. But overall, it's obviously a big day in the market, and the indices flied, and I think that's pretty awesome. So we'll be staying up to date on everything that's happened. But essentially, what I'm doing, like I said, are these long-term put credit spreads. So if you want to do it on a company, you simply go here, you go to view all options, you go out really, really far to January 2022. You would click the sell put button, and if you pick like a 125, you would sell this one and buy like the 120 right here. So you would risk $500 and you'd get 250. So you get a 50% return on investment. That's some really, really good money if you want to be bullish long term. Not even bullish, just you can just be neutral. You can just say the market's going to be just not move much at all. The market can go down a little bit. It's a very safe strategy long term. I mean, I'll admit I messed up. I was doing these things short terms, and yeah, you get insane percent returns. But if you lose once, you get screwed, and that's exactly what happened last week. We got rocked hard. Our account sitting pretty at $124,000. Bam! What happens next? We're down to freaking 79K at one point. Just a brutal loss. But we're making it back. We're at like 88.8 right now. And like I said, as time goes on, the stock doesn't have to move much. It can stay exactly the same. We still make over $30,000 in a year. So big stuff on the horizon. I'm excited to see where everything goes, but let me know your guys' thoughts on that, because it was not, the decision did not come lightly. I obviously had to think about it a lot because it's a big decision to make. Selling a leap call that we had, for a $5,000 loss, it sucks. Like, no one wants to do that, but sometimes you have to do it. You have to sell for a loss sometimes when you can go ahead and find opportunities that are a little more safe and better for your risk management. So obviously, our account has grown. We don't want to lose that. But like I said right here, look, we sold it for $40,350. We bought it obviously for a lot more, about $45,000, 45.5 actually. So we lost a little over $5,000 on that call. But it's one of those things of investing. You take losses sometimes, but we're on the road to recovery, and we're gonna have a lot less stress, I'll tell you that. So that's worth it as well. But anyways, guys, I hope you guys enjoyed this video. I hope you guys understood what I was saying about switching my option strategy to a more longer term approach. Like I said, we're gonna close these guys out pretty soon as well and roll those longer term as well. But anyways, guys, that's about it for today. Hope you had a great day. If you're a bull, you did. But yeah, guys, just enjoy the day, and I will talk to you in the next video. Bye, guys.